Hey, what's going on, everybody? This is Cameron with Kinley Accounting here, and we're back for part 3 of our How to Minimize Your Tax Liability series. Now, I'm telling y'all, every single week, oh, I want to minimize my taxes. Oh, I don't want to pay as much in taxes. I know I'm making a lot of money, but man, my tax bill last year was so high, and I know I made more money this year, so it's going to be higher. If you follow these 3 steps, I got you. I'm going to save you money. But you got to do these steps. So in the other videos, we talked about how to minimize, which is through accounting, when to minimize, which is in that current year or before year end. Now let's talk about some different ways to minimize. Well, you have tax planning, right? Which is, let's take everything that's going on with you. Married, filing status, do you have multiple businesses? Do you and your wife work? Is your husband a high income earner? What does that look like? Maybe they're in sales and commissions, so you're trying to figure that out. Are we withholding enough? All of those things can be answered with a tax planning session with your accountant. I think it's beneficial, especially once you're over the 6 figures mark, especially when you're in that 3, 4, 500K range and up with combined income, because now we need to see, hey, what are your goals? What are you aiming for in the next 5 or 10 years? Where are you trying to end up? Then once we know that answer, we can work backwards to say, well, hey, yeah, you have a marketing agency, but you also have 5 rental properties, right? So we need to make sure all the income over here is going to be accounted for or offset. Or we may be, because we're making so much money over here with the marketing agency, that will allow us to withhold more, set more to the side, be prepared, etc. So that's one way. Another way, which is like, this is one of those ways that everybody argues and gets so confused about because they're listening to their buddy who, I don't know where they got it from. But another way to minimize how much you owe is paying attention to what is your business entity. Are you an LLC? Are you an S Corp? Are you a partnership? Are you a C Corp? Everybody's name has so-and-so LLC. That's not what we're talking about. When you first started your business and you filed all the paperwork, they're going to send you some type of mail and it's going to say at the top, hey, you need to file a 1040, 1120S, 1120, 1065. That's what you really are, and that determines everything. That determines how many tax returns you need to file. That determines how your accounting looks. That determines how you get paid. All of those things matter, and each one is treated differently for tax reasons. So maybe you're an LLC, and maybe it's the best thing for you specifically to become an S Corp. Maybe you're a partnership, and maybe it's better for you to be a S Corp. Maybe you're an S Corp, and you really didn't know what you were doing, or your buddy told you. So maybe you need to revoke that and become an LLC so life is simpler. You don't have to be on payroll and pay payroll taxes. We don't know. Any great accountant would look at your accounting first and then do an entity analysis to be able to tell you, hey, these are your options. Here's the cash out. Here's what the accounting says. This is what is tax owed. This is a great thing to do and assess, especially if you're in like year 2 or year 3 where you started really picking up your business. But again, that's how you can minimize the taxes, by being in the right entity or by getting a tax plan or strategy session done. All right, so don't let anybody tell you anything else. Just doing regular taxes, knowing deductions, that's like basic. We're not talking about that. That's for the people who like just started in the first 6 months, or they're a W-2 person. We are talking about the advanced and complicated strategies that's going to help you to save tens of thousands of dollars. The more money you make, the more money you'll save. Will you have to spend some money to save some money? Of course, that's life, that's investing, that's financing, but I promise you it'll be worth it. Again, hopefully you like this video. Thank you guys for watching. I hope this series has really helped you and maybe cleared up some things so that you can prepare in the future to not pay as much for your taxes. If you have any questions, feel free to send me an email at Cameron@kinleyaccounting.com, or you can just go to our website where we have so many free resources which is kinleyaccounting.com. If you have any financials and you've been kind of managing it on your own, but man, we're growing so fast, I don't have time. I'm not confident in what I did. It's too much for me. I'm tired of keeping up with everything. I need a system because I'm growing so fast. Call your boy. Call me. Go to the website, kinleyaccounting.com. Let's get to work. Or we can come in and do an accounting diagnostic review, and we can break everything down, tell you what needs to be fixed, and go forward from there. Okay? So I love you guys. Thank you so much for your time and attention. Make sure you hit like. Share this with other business owners, because we're just trying to help people to grow and continue to not only save money, but make money as well. All right, guys. Love you so much. Have a great rest of your day.
Quickly now, your faith so fragile, like the seed that fell in the thorns or weeds. When worry comes, it chokes it, you can't be free. Your faith so fragile, it's like the planet.